What is up YouTube? My name is Aditya and welcome back to my channel, The Indian Algo. So in today's video, we'll be discussing about Wyckoff accumulation phases on lower time frame, which is going to be 5-minute or 1-minute time frame. Alright. So in the previous video, if you haven't watched, we discussed the Wyckoff accumulation phases on daily time frame. And today, yes, we'll move down to 5-minute and 1-minute time frame because this is what you guys have been wanting for a longer time, right? You guys want to trade the 5-minute and 1-minute time frame by understanding the market structure. Okay, so try to understand, guys. This is also smart money, but I don't want to term this as SMC. Okay, we are understanding the accumulation of institutions, where the institutions are trying to accumulate the prices, their orders, and then moving it higher to the upside or downside, whatever the price wants to do. So we are trying to understand that. We are not simply understanding or taking entries at order blocks. As soon as the price touches it, we put a limit entry here, put a stop loss here, and then the price move higher. We are not going to do that. We will understand and know exactly why the prices are trying to move up or down. All right. So I'll take the example of the of Adani Ports, which we had discussed in the previous section, where we were very clear with the trend. First of all, let's try to understand where am I supposed to identify my Wyckoff. That is very important, right? Where are you supposed to identify a Wyckoff? Number one, so it should be at the point of interest. It should be at the point of interest. How do you identify the point of interest? Using market structure, right? And you will be trading it with the trend. Trade it with the trend, okay? Because you must have heard trend is your friend, right? That's the first thing we hear as soon as we enter the market. Point of interest is very important. Market structure is very important. Trade with the trend. All right. So how am I supposed to do this? First of all, let's say the prices move higher, creates a new high, right? So we know that this is an area where when the prices are coming back for a pullback, this is where I will be looking for my trades, and this is your area, this is your point of interest where you will try to identify Wyckoff. Okay, so even if you can enter on 1-minute time frame here or 5-minute time frame, you can actually hold the trades very much higher if you are entering the trades like for swing. Okay, and also you can trade this on in stocks, you can trade this on forex as well and cryptocurrencies as well. So let's come here. Let's go with the very an example that we are well aware of, because this is what we had discussed in the previous videos. Okay, so this is where the price creates a new high, right? Creates a new high. Now why will I not term this as distribution? Obviously there is some obviously there is some sort of distribution, but will I see equal highs, fake out, the price move lower, but will it go much lower? There's no way unless and until the trend is not taken out, guys. This is important. The trend is here, so don't simply expect the prices to move lower and fill the imbalances here, right? It won't. So what are we supposed to do? This is my area, point of interest. Price creates a new high, the price is following the trend, right? And this is where we predicted that the prices will go below these equal lows and then start moving higher, and that's what it did here, right? You can go back, check out my previous videos in the playlist of so-called SMC concepts. I guess I've mentioned it there, or I guess I mentioned it in the order block series somewhere. Okay, so yes, do have a look. Okay, so right here, what are we supposed to do? We will combine all our previous studies now, how we studied order blocks and all of that, right? So right at this area, we will go do what we are supposed to do. We are supposed to move to the lower time frame, right, and identify our order block. How do we mark our order block, guys? I hope you guys are well aware of it. Okay, so here, this is what I'll do, right? This is the down move that hunted all this liquidity and then moved higher. For people who do not understand this, please go back to my previous videos, understand how I draw order blocks. You will definitely understand this point. Extend lines to the right, and this is where the prices are now coming down. Okay, now try to understand this, guys. Try to understand this. what is our area of entry? After the price creates a new high, it tries to come here as well, moves higher, creates a new high. So this is actually a complete big trend. This is actually a complete big trend here. Now, when are we supposed to take a trade? When the prices pull back, when the prices are around this area. This is where we need to understand what the prices are doing and then initiate the trade. I am not somebody who would want to initiate a trade as soon as these levels are touched. You see, this 50% will give you some good reactions, but am I supposed to take a trade right at the reactions? No. You can for scalping purposes, but here we are trying to understand when the prices will actually move, which is very important. Okay, so the first point is what you have to understand here is this. Let's say this is your point of interest. This is your point of interest, right? This is your point of interest, and the price is coming back for a pullback. The price is coming back for a pullback like this. Now, this is where the question comes, should I enter at this low? Should I enter at this low? What is the price gonna do? So what you're supposed to do is identify your Wyckoff phases around this area. This is your point of interest, so you'll be identifying your Wyckoff phases only at this area. Okay, only at this area. So let's say the price creates this is your PS, because after PS what comes? Selling climax. Okay, so I'll write this down for you. This is your PS, this is your preliminary support. The price comes here, creates SC. After SC, obviously you will see some reaction. See, now it's not necessary that the SC will come at 0.5 or at 1. It can come anywhere. Okay, then the prices will move higher, create AR. Now make sure guys that you are aware of the last origin supply that the price has created. In this accumulation phase, you need to be aware of the last origin supply. How are you gonna be aware of the last origin supply? If you remember how we identify the uptrends, we identify uptrends like this, right? So this is my demand, origin demand. So what's gonna be your origin supply? Origin supply is gonna be this, right? This is your point of interest, right? So if this breaks, we know that the prices can move higher. So the same case is here. Let's say this is your PS, but somewhere here, okay, let's say somewhere here you have your origin supply because it broke this low. Okay, it broke this low. So this is your origin supply. The prices touches this part and comes back lower. It creates this. Okay, one second, I'll do this again. So this is your AR, right? This is your AR. I hope I'm not going too fast. Please rewind the video, watch it as many times as you can guys, because I have some limited time. If you see, it's already 8 minutes passed on, and I need to cover everything within a 30-minute video or 25-minute video, because a lot of people don't usually watch these videos much longer. Okay, so PS, SC, AR, automatic rally. AR is your automatic rally. Now unless and until this PS is not taken out, we are not going long. Unless and until this origin supply, not only PS but the origin supply is not taken out, I am not going long, because the lower time frame structure is not taken out. The lower time frame structure is still bearish, because then the prices could create a new low and then fall lower. We don't want to get involved in that. Now what happens? Let the price come back and accumulate. Understand this guys, keep this in your head. Whenever the prices come to an area of interest, point of interest, it is coming for accumulation, so it will spend time. Keep this in your mind, it will spend time. If you simply start taking trades, what it will happen very rarely that the prices simply touches and move higher. It's fine. This is what these SMC traders teach you, but don't do this guys. Don't do this. It's gonna be very tough for you. Let the price build up. So at this automatic rally, let the price come lower, let it do whatever it wants to do. Remember the few next phases. Let's say this is your ST, because the price touches this level and moves higher. This is going to be your ST, comes back, creates another ST, did this. So the crucial point of this is the prices has created SC, ST, ST, and it comes back lower, creates this, okay, takes out this supply ST, and this will definitely look like a spring. But will it be a spring unless and until this supply is taken out? This is the most crucial point, guys. This is the most crucial point. Unless and until this supply is not taken out, this is not your spring. Okay, so this could be a spring with a question mark because it's not a confirmed, right? It's not a confirmation. Now what the prices could do next is come back lower, hunt this again. Okay, hunt this again. So now you know that this could be your spring and this could be your ST now. Okay, this is very important, guys, to understand. And then the prices actually breaks above this origin supply, this area, and this is your SOS. Am I supposed to go long just after the supply is taken out? No, 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 no. We all know the last phase, right? We all know the last phase. What is the last phase? The price will come back. It will either take support at this area or this area, and this is where it will start moving higher because this will be your LPS. Okay, just do yourself a favor. If you are waiting for all of this confirmation, you will not get a trade maybe every single day, but you will be consistent with your trades. Consistent, that is what is important. If you are trying to take trades every day, guys, I'm just trying to make you understand that trading is not about taking trades every day. Even the best traders out there do not trade unless and until they are scalping. That's completely fine. They have to trade every day mostly. But if you want to be somebody, see, scalpers make a lot of money if they are doing it right. Yeah, but day trading is very tough, like holding on to trades, getting into right trades. It's tough. You may have different strategies, but to be a consistent trader with simple methods and with high risk reward trades, you can take trades with 1:1 setup, 1:2 setups each day, but your accuracy will be weak. But if you wish to enter trades like 1:5 and 1:4, you need to understand that there will be less trades involved. Okay, you will have to be involved in lesser trades to maintain such high risk rewards and highly accurate trades. Okay, this is where your LPS will be, and this is where you want to enter your trades. Now I'll come to this chart. Okay, so we have already plotted our order block point of interest. Now see this. This is what I am talking about. As the prices are falling lower, look at this. This creates a new low. So as of now, my only supply is this, but then the price creates this low and then this low, right? So then my supply is this around this area. So this is my supply. Unless and until the price do not take out this supply or creates a new low for me to consider this as my next origin supply, I will not be taking trades. So see what happens here. This is where you call this as your PS, right? This is your PS around this area, because just look at the candlesticks, widespread candlesticks. That's what we learned, right? So this is your SC, this is your SC. One second, this is your SC, this is your PS, this is your SC. The price moves higher, it's your AR, automatic rally around this area. Now look at this, ST, this is your ST, it comes for a test, it comes for a test, comes for a test. But just look at this, definitely this ST went below all these lows. So this could be a spring as well, but is that a spring confirmation? Unless and until the supply is not taken out completely, not at all, right? So this is not a spring, but the price then comes back lower. Now this could be a spring in question, right? This could be a spring with a question mark, that if this is my spring or not. And this is where the prices moves higher. Okay, now see this, this fall takes out all these lows, right? Takes out all these lows. So this is the move that created new origin supply. Remember how a downtrend works, right? So this is going to be my new origin supply. Then the prices simply moved higher. Still, it's not a confirmation that this is a spring, but this is your test of spring. Yeah, so you can call this as spring test. and then if you see this thing, this supply gets taken out by this down move, right? Sorry, this up move, so this up move is now going to be your sign of strength. This is what you call SOS. And after SOS, obviously, if you simply remember, what are we supposed to do? We are supposed to take trades at the LPS. So now this is my LPS. Obviously, you can take trades at the spring around this area at spring test, but these are going to be the less probable trades. You can enter if you have much experience, because you understand that this area is a very important area, hence the spikes will definitely come in my direction. And this is where you could have entered the spring test. The prices comes back here somewhere. There is some sort of demand, new demand that was created at this spring, right? And then the prices simply start moving higher around this area. So forex, for people who are into forex, just see how nicely the price is sustaining at the 0.5%. The price is sustaining at the 0.5%. So if the prices are sustaining around this area after SOS, now understand this, guys. Now you can simply take trades here on 5-minute time frame and put your stop losses below the spring, or when the price starts taking off, you can put your stop loss below the LPS. That's completely fine. But this, after understanding all of this, this should be the trade location that you should be looking for, and how nicely it is taking support at the 0.5 area. Now what you can do more at this place is try to understand this fall and identify more of Wyckoff here. Let's go to 1-minute time frame. Let's go to 1-minute time frame around this area and let's identify my Wyckoff. Okay, so this is where you see the fall comes in somewhere here. This is going to be your PS. The price creates a new fall. This is going to be your SC, automatic rally. Okay, now understand that whatever I'm writing here, it's a little subjective. These phases are a little subjective unless and until the price do not take out this supply, right? This supply, the prices can still go lower, because this is the last supply. Price can still fall lower, but as we know that the 5-minute time frame is higher than this 1-minute time frame, and the 5-minute time frame is in an uptrend. Hear this again, guys, concentrate on this. The 5-minute time frame chose to be in an uptrend after it broke this supply, and this is where it's creating a higher low. And on this higher low, if you can get your entries on 1-minute time frame, then you can simply hold on to these trades till here and achieve good risk reward. But how are you gonna do that? Let's come here, and in this case, I'm being very honest, in this case there was no entry as such on 1-minute time frame for a smaller stop loss. But let's try to understand this once again. This is where you say, let's say you identify your PS, right? This could be your PS, right? This could be your PS. This is your selling climax, SC. Now understand, your PS is here, but your last supply is here. So it's not going to be necessary that every time your PS is going to be the area that the price should break. SC, price moves higher. This is going to be your automatic rally. After this automatic rally, the price creates this. This could be your ST, right? Initially, we mark all of this as ST, ST, all of this as ST, ST, all of this is your ST. Now, this is an example where there is no spring. This is an example where there is no spring. The price did not created any new supply. Hence, we wait for, always remember, this supply is something that we should be waiting for. We wait for this supply being taken out, the prices comes back. If the prices would have come back around this area, I would have loved to go long on 1-minute time frame. On 1-minute time frame, I would have loved to go long, but yes, on the next day, it gives me some entry around this area, and I had taken this trade for this target because I know the momentum will come as the prices have built up very much. The prices have built up very nicely around this area. And I'll show you an example for that as well. I'll show you my Discord where I had mentioned clearly, this is 14 September, right? I had mentioned clearly that Adani Port will move highly with high momentum because there's no resistance. So I'll just open my Discord chat room and I'll show it to you. So if you see this, very strong up move can be seen tomorrow in Adani Ports. This was posted on 13th of September, right? 13th September 2021. And now when I come here, 13th September, this is 14th September. So we took a trade on 13th September. We analyzed the charts on 13th September and we took a trade on 14th September. Very nicely it worked in our favor. So all you have to do is identify your point of interest, find out your accumulation phases, and then initiate a trade. Wait for the market to break structure and then start taking trades in your direction. This is where you can simply move down to lower time frames and initiate your trade. So now I'll go to let's go to Tech Mahindra. I recently took a trade in Tech Mahindra as well. Let's go to 5-minute time frame and let's see. I'll just open the charts on I'm not sure where was the trade that I take. Okay, yeah, so somewhere around these areas. I'll have to move to the 1 hour time frame. Okay, so we are here on the 1 hour time frame, and somewhere here if you see, the price creates a high, pulls back, creates a new high. Okay, it creates a new high. So this area has my point of interest. Somewhere here will be my point of interest, right? So I'll go to the 15-minute or 5-minute time frame to identify the move that hunted liquidity. It's this one. So somewhere here I will definitely have my point of interest. What I'll do now is I'll extend lines to the right side. Obviously, see, the prices can definitely move lower, but it's completely fine because the trend is still up here. And now around this area I would want to identify my Wyckoff. This is the difference that will change your perspective, trading perspective, because unless and until the low, you see this downtrend, this was not taken out, there was no trade. The price comes back, creates a new low, then breaks it, and this is the area where you will again start looking for your Wyckoff. And you need to understand that unless and until this area is not taken out, the prices when comes here will not move higher. But this is what it does. The area gets taken out, the supply gets taken out, price comes back around this area and starts moving higher. Alright, so what I'll supposed to do here is identify my Wyckoff to time my entries. Alright, so I'll just move to that particular lower time frame. Okay, I'll come here around this area. So around this area I'll simply mark this and let's identify our trading opportunities. Okay, let's go to 5-minute time frame, guys. So here we are on the 5-minute time frame. Let's identify the selling climax and PS and all of those things. Okay, so the price creates an up move, falls lower, does this. So yeah, I cannot really see any good selling climaxes here, any good selling climaxes around these areas, because this does not really have any selling climaxes on 5-minute time frame. Like there's no good candlesticks, widespread candlesticks that could be marked as selling climaxes. Let's go to 3-minute time frame. Go to 3-minute time frame, I guess. Yes, this is the area we are looking at, right? Alright, so yeah, I can term this area, this low, this huge fall as my selling climax, because this is where, if you see, there's some good climatic candles. What do I mean by climatic candles? Widespread candles. Okay, so I would prefer to term this as my PS, this area as my SC, selling climax, this as my automatic rally. Then the price creates these lows, gonna be my ST. So we have multiple STs around this area. Then identify the move that created a new swing low, right? So this is the move that created a new swing low. So this is gonna be the last supply that should be taken out. Okay, see this. Until here, when the prices did not created a new swing low, or until here when the prices created this swing low, this was the supply that I should be focusing on. But when the prices are here, this swing low created a new low, hence this swing low is very important, and this is where I would mark my supply and wait for the supply to get taken out. Price comes back around this area. So if I show this to you, this is supposed to be your entry criteria, and look at the spike. Now why is this going to be your entry criteria? Watch the video once again. The answer is here in the structure. I've repeated it multiple times. I hope you guys are getting it. SC, ST, ST, the price moves here, ST. This downfall is your spring. This liquidity is your spring, but still in a question mark, because unless and until it do not take out this supply, it's not your spring. Unless and until it do not take out your supply, it's not your spring. So the price eventually then takes out the supply, pulls back to this rally, base rally, comes here, starts sustaining. So this is what? This is your LPS. And look at this, LPS is taking good support at one level, right? Because of the order block, the prices will sustain these levels. You could have entered anywhere. You could have entered your trade anywhere in this trade, in this area. And this is where you will see the spikes. But you see, this is where a lot of people go wrong. They are trying to initiate trades at this point, 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 at this, but the only worked this one. Okay, now there's a reason, because you are not waiting for the prices to develop. When I say let the price come back to a demand zone and develop, it is important. Let it come back to a demand zone and let it develop. Keep this in mind, guys. Let it develop. Let the price develop and then initiate a trade. And look how huge the price moved eventually, right? Continued moving higher, higher, higher. Alright, so this is what you are supposed to be focusing on. So you can take multiple trades. Now again, if the prices are here, just see this. Look at this fall. This is my selling climax. I can clearly see this is my selling climax because of this huge fall. So this is my PS, and what's going to be my supply somewhere here. So it's not taken out as of now. The supply is not taken out as of now. Price creates a new low. So this area is my supply now. This area is my supply now. It gets taken out here. Okay, so there was no trade. There was no trade, guys, here in this area. The only trade we had was after this supply was taken out. Okay, the price comes for pullbacks. So let's see if the prices are giving us any trades. PS, SC, price moves higher. This is your automatic rally, could be your ST. Now this creates a new spring. Yeah, that's a spring. There's a minor structure break here. You can definitely enter this minor structure breaks, but if you want the prices to move much higher, because see, the prices can touch this and fall lower. But if you are aware that this order block is very strong and it can help you take trades in your direction, you can enter your trades here and target these highs. So you can also wait for these minor structure breaks. Usually don't do it much because it's not going to help, but if you are able to identify the trend properly and the point of interest properly, you can actually trade it. So you get this spring around this area, price takes this out. So this could be your SOS. This could be your SOS. Okay, so not always the thing is gonna work that this is the last supply and the price should take out. So that's a good example right here. All right, and then SOS, this is your build up, last point of support, last point of support, last point of support around these areas. Price build it up and moved higher. All right, guys, so this is it. I'm ending this video here. This will be around 30 minutes now. So I hope you like the video. Please comment down and comment down your views. You guys are commenting very nice appreciation for me, so it feels really good. Also, like the video as much as you can, share the video as much as you can, and please don't forget to subscribe to the channel. I always make sure that I've been saying like and subscribe in the last video, in the last part of the video, never in the start of the video. So I'll keep maintaining that. Okay, please guys, go ahead, subscribe to the channel. Thank you so much.